Assalamualaikum. Good day, boys and girls. I'm Mr. Bobat, and I'm doing the presentation with regard to this accounting for grade 12 revision program. Regent Business School is hosting it, and we'd like to thank Regent Business School for this opportunity. Okay, now just a few simple rules. I'm going to go through that paper, but I'm using that paper just as an example. I will try and cover as much information around a question. Now, if any of you have a question, I have one policy normally where if you're not sure of something, if you want clarity on anything, you can just simply drop a chat in the chat box and then they'll pass it on to me and I'll answer your question. So if you've got any questions, don't hesitate, ask. So at the moment, I can't see you, only you can see me, so I don't know who's got a question or not. But just remember that if you're not sure of anything, just ask. Now, what we're going to do is I'm going to go through that paper with you. But like I said, I'm going to try and cover everything around it. So in other words, in preparation for the final exam. So now let's just take the first thing. Now, in your preparation for the finals, I want to tell you one thing. You see, always learners tell us that the paper was too long, they're not sure of something, this, that, and the other. Now, I want you to understand something. You know, when they give you 10 minutes, I tell my learners that we're always on a winning wicket. What do I mean by that? I tell you normally, or I tell my learners always, you see, when they give you the 10 minutes of reading time, see, accounting is a practical subject. It's a subject with individual questions over there. And that 10 minutes of reading time, I watch most learners, what they do is they take the paper and they start reading from cover to cover. Now, when they tell you to start writing, you straight away now, you can't write, you can't answer the question. What you're now doing is you go and say, okay, you're going to start with question 2. Then you start reading question 2. So what I suggest, and I found it works, look, all these methods have been tried and tested. Do what I tell you to do, and I'm telling you, you'll be smiling all the way. So the first thing, for the exam itself, when they give you the exam paper, flip through it, spend 1 minute. Then choose your question quickly, but you have to answer all. So you're going to start with question 1. Then spend the next 8 or 9 minutes reading question 1 if that's the one you're starting with. So read the whole question, start thinking about it, figure out your answers for that particular question. Don't worry about the rest of the paper. And then when the invigilator tells you to start writing, you've already figured out your answers and you start writing. You're just simply going to read the question, you're going to answer. So just remember that, keep that at the back of your mind, that reading time of 10 minutes, don't waste your time reading the entire paper. It's not going to help you because then at the end of the day, you're going to start with the question all over again. So rather spend that 8 to 9 minutes reading one particular question. Okay, all right, now let's look at this paper. I've taken this paper here. This was the Eastern Cape paper that they posted, and everything's going to be tested. So there's no such thing as spotting. There's no such thing as I can leave this aspect out of this section and so on. Now, Auditors Report. The first question we've got over here is the Auditors Report. Now, with regard to the Auditors Report, you know there's going to be a question in the exam on the Auditor's Report. That question is going to be there. So you need to make sure that you go through the Auditor's Report. Now, you know that there are different types of audit reports. Okay, the best audit report. Now, many learners sometimes think that they look at the word qualified, they look at the word unqualified, and they think that unqualified is something bad. We're not talking about the qualification of the auditors. We are looking at the report that he is presenting. Did he qualify his audit report or not? So the best audit report you can get in any company. It's a unqualified audit report. So the best one is your unqualified audit report. Then the second one that you're looking at is qualified. What do we mean by qualified? We are saying that he is qualifying his statement, because an auditor gives you a report, it's a statement that he's making. So what is he saying? If he found one or two minor issues, he qualifies his statement. He's qualifying his audit report. So the best audit report is the unqualified audit report. The second one is a qualified where he's found one or two issues. And then the worst of the lot is a disclaimer. It's a disclaimer. Now, sometimes some of you may have come across an unqualified report, a qualified. Then sometimes they use the word adverse. You can get an adverse report, but an adverse is basically a qualified audit report. And then, of course, I told you the worst of the lot is the disclaimer, where the auditor refuses to express an opinion. Now, you must remember that sometimes they use certain words in your question. You must try and look at the words and try and understand. And once you understand, you're going to find that the question becomes absolutely easy. Let's look at the first one, where they've got certain things where you had to basically choose the correct answer. So, in choosing the correct answer, the first one they said, responsible for reviewing fees payable to directors. Now, look at the word review fees payable. Now, I know this came out last year, and the learners were complaining. They asked, what is the role of the Remunerations Committee? They used the word Remunerations Committee, and learners said, we never ever came across this. What is Remunerations Committee? We don't know about Remunerations Committee. We did accounting, you did your income statement, balance sheet, you never come across remuneration. But look at the English meaning of the word to remunerate. To remunerate means to give, to pay. Because you're paying your workers, it's a remuneration. So the first one, responsible for reviewing fees payable to directors. Who's responsible? It's definitely not the non-executive directors. It's not the executive. You've got an audit committee and you've got the internal auditor. So you've got basically the remunerations committee. So the answer for the very first one, fees payable to directors, they are responsible. That's the remunerations committee. Now, the second one, they serve on the board of directors but do not work at the company. Now, you must remember, you've got a board of directors. The board of directors are people that run the company. They've been appointed by the shareholders and they run the company. But they need ideas and suggestions from outside. Now, you have executive directors and you have non-executive directors. Now, your non-executive directors are the ones that come from the outside. They only get paid if they attend meetings. That's your non-executive directors. So, the answer to the second one, they serve on the board of directors but do not work at the company. They are from outside. They are invited for the meeting and they attend the meeting and they will get paid. That is your non-executive directors. Then the third one, well, obviously the executive directors are the ones that work in the company. They are the ones that run the company and they earn directors' fees basically. Then the third one, appointed by shareholders to perform key management functions in the business. They are appointed by shareholders. So who are they? It's not the internal auditor is appointed by not the shareholders, sorry, it's appointed by the directors. But our answer for the third one will obviously be the executive directors. The executive directors are appointed by shareholders to perform key management functions in the business. Now, these are 3 marks that they're going to give you. You should be able to pick them up quite easily. Now, let's look at the audit report itself. And I'm repeating, definitely you must get an audit report. Your paper it will be incomplete without the audit report. It will be foolish not to go through the different audit reports. The questions are always almost similar. You just need to watch your language. If you express yourself clearly, you shouldn't have any issues. Now, if I have to read the audit report, let's look at the audit report first. Extract from the independent auditor's report. Now, this audit report is presented to us by the external auditors. These external auditors have been appointed by the shareholders. To whom is the audit report addressed? It is addressed to the shareholders. The external auditor's report is addressed to the shareholders. They have been appointed by the shareholders, and they will get paid by the company. They will get paid by the company. Now, there's lots of things that you can work around this question, but let's look at this audit report first. You've got the basis for opinion. A donation of 1.2 million was made to a local community organization for the provision of face masks and hand sanitizers to local schools. Okay, all this looks well and good. We're giving a donation. This is good corporate governance where we're trying to help the community. Everything looks good. But what are the external auditors saying? They are saying proper procedures were not followed and no documents were available to verify said transaction. So now what they are saying is that they never followed procedure and there were no documents. There were no documents for that donation of 1.2 million. Now, the audit opinion itself, in our opinion, except for the donation. The moment they say except for the donation, they are telling you that everything else is in order besides the one issue that they have with the donation. Straight away, your answer for the first question is whether the type of report, it has to be a qualified audit report. You can't say it's unqualified because they use the word except. That means they are telling you, they're highlighting the point that there was a donation, that they did not follow due process. The financial statements fairly present the financial position of the company on the 28th of February 2021. Now, many learners will see the financial statements fairly present the financial position. They'll see fairly present and they say, oh, this is an unqualified audit report. It's not an unqualified audit report because they are telling you that everything else is fine except for the donation. So the moment the auditors, the external auditors appointed by the shareholders highlight an issue that they had a problem with something, it becomes a qualified audit report. So the first question, identify the type of report and explain why this type of report was issued by the auditor. So my answer to the question firstly is that it is a qualified audit report. Then secondly, and explain why this type of report was issued. It was issued because there was no documentation and no procedures or proper procedures were not followed. Plain and simple. You don't need to look for some fancy answers. It's right there. Proper procedures were not followed and there was no document. Because the auditors didn't have documents to show, to prove why and how it was approved and so on. But remember, directors can't just do whatever they want to. They need to get approval. So for the 2 marks, you scored it, you identified the report, and then you explained why. Second one, explain 2 points why shareholders will be concerned about the company receiving such a report. They're giving you 4 marks for this. Now think logically, think clearly. They got a qualified audit report. The moment you get a qualified audit report, it tells you that there's some issues in that company. There's some problems. Straight away, if you have potential investors, they're not going to want to invest in your company, or they may not want to buy shares in your company at all. 2, you're going to find that the image of the company is going to be it will appear in a bad light. So the image of the company will be affected. Thirdly, this could be fraudulent. It could be, I mean, maybe the donation wasn't 1.2 million because there was no documents. We gave a donation to the school. Maybe the donation was only 400,000 or 500,000, but the rest of it, the directors may have taken the money for themselves. So this could be fraudulent. So now they ask you to explain 2 points why shareholders will be concerned about the company receiving such a report. And I told you now that it will affect the image of the company. It will cause potential investors not to want to invest in the company. You will find that also the price of the company shares will decrease. It will drop on the JSE. Straight away, the moment a company gets a qualified audit report, you'll find that there will be some existing shareholders, people that got shares in the company, they won't want to hold those shares. They'll say, I might as well dispose of it, sell it. And if you get a lot of people saying sell, the price of the shares will drop. And that's going to affect the remaining of the existing shareholders. So those are some of the issues that you will raise with regard to why the shareholders will be concerned about receiving such a report. Nobody wants to get a bad report. And a company gets a qualified, there's a problem. The third question, the CEO requested that the auditor classifies this donation as a sundry expense and adjust the audit opinion accordingly. So the CEO, the Chief Executive Officer, he's telling the auditors to classify the donation as a sundry expense. So he's telling the auditors what to do, and they must adjust the audit opinion accordingly. And in other words, they must give a clean bill of health. They must say that audit opinion, that there were no issues. Basically, that's what he's asking them to do. They said provide 2 reasons why the auditor would not agree with the suggestion. Now, why would the auditor not want to do this? I mean, they are getting paid for the job. But the thing is, you must remember the external auditor is a professional. He belongs to a professional body. He's not going to jeopardize his position so that he can satisfy the CEO. So now they said, provide 2 reasons why the auditor would not agree. So the first point, you can say that he's a professional, he belongs to a professional body, and he will not want to jeopardize his position with regard to his qualification and his profession. Secondly, this could be fraudulent. This could be fraudulent. So he would not want to be part of any fraudulent aspects with regard to the donation that was provided or given by the directors to the local community and the local schools. The fourth question, apart from the issues mentioned above, explain why the company would be accused of poor corporate governance. Now, you must remember poor corporate governance. Now, corporate governance talks about transparency. In everything that we do, we must be transparent. Now here, there was no proper procedure. So there's no transparency. And 2, there was no documentation also. So you're going to say that because there was no proper procedure followed, there's no transparency, and good corporate governance requires you to be transparent in everything that you do. So we can raise the issue of transparency over there. Now, in terms of audit reports, you'll need to look at the different types. In your preparation for the finals, you know that it's going to come out. None of you need to go around looking for where's the paper leaked and so on. Go through the audit reports. There's only 3 reports that you need to look at: qualified, unqualified, disclaimer. Read up the issues, and I'm telling you, you will have 15 marks in the bag. Now, sometimes they ask you general questions. Tell me, you know that external auditors, these are external auditors, they are independent, they have to be unbiased. They're not supposed to have any links with the company. They're not allowed to have shares in the company, etc. You must think logically. That's all I'm asking you to do. Think logically. You have external auditors. They've been brought in by the shareholders to audit the books. Now, you must think that these external auditors, they're not allowed to have shares in the company, and they're not supposed to have any links. Now, they are expensive. You must remember, auditors get paid according to the number of hours that they work, they put in. The auditing company will send a team to your firm. You see, you must try and make it into a story. You must try and imagine. You have an imagination, you'll be able to work things out. They send a team to your company. That team is going to sit there and they're going to ask you for documentation for all your financials. They want to verify and they check. Firstly, remember, I told you external auditors are expensive. They charge you by the hour, the number of hours spent in the company. They might spend 3 weeks, a month in your company, depending on the amount of work. Firstly, they're not going to check each and every detailed document over there and so on. They do the keywords sample testing. They will do sample testing. That's why they do ratios and so on. They will do sample testing and they will know, they'll be able to pick up whether there were any issues, there's something not right here and so on. But I need you to remember also at the same time, it is not the responsibility of the external auditor to detect fraud. He never comes to your company, looking for fraud in your company. That's not his job. Only if through his audit he comes across something, then he must investigate it. Now they can ask you a question, how can you reduce the external auditor's bill? Because I told you they're expensive. These are simple answers. You think about it. Somebody comes to your company, they want to do an audit, they're going to check your financials and so on. They're going to charge you according to the number of hours they spend. So it's in your own interest to ensure that you have all your financials, all the documents easily and readily available. If you can give them all the material as they ask you, they might ask you for your bank statements. You must be able to produce it within a few minutes. You should have everything ready for them. So you don't waste time. It mustn't be a case they ask you for some invoices from one of your suppliers, from one of your creditors. They ask you, bring us these invoices that you got for these transactions. And then you say, okay, I'm gone looking for it. And you start searching and you spend a few hours hunting for those invoices. They're going to sit there. The clock is ticking. They're going to bill you. So remember, have all the information ready, easily available. Your bill will be reduced. Then they love to ask you this question always. It has been repeated so many times. Why do the auditors in the audit report refer to pages? They say we have examined the financials as set out on pages 15 to 29. Why did they indicate those pages? Simple. Those are the pages where the financials were. Those are the pages that they audited. Those are the ones that they are going to be held responsible. Think logically, nothing difficult. So basically what we are saying, that they are telling you that those are the pages we check the financial, and those are the ones that we will be held responsible for. Now, one more question and then we move on. They can ask you if an external auditor is found to be negligent in his responsibility or in his audit, what are the consequences? Favorite question. Now, I can guarantee you from the question we've done and what I'm asking you now, there's nothing outside of that they're going to ask you. Think about it logically. So in this case here, if the external auditor is found to be negligent, what are the consequences? So you think about it. Firstly, he's a member of a professional body. He could face disciplinary hearing. he could be suspended. The worst case scenario, if he's found that it was a serious offense, of course, he could get struck off by the SICA. SICA stands for South African Institute of Chartered Accountants. He can get struck off. But remember, firstly, he's not employed by SICA. He's a member of a professional body. You know, I see learners, they write down, oh, he'll get fired by SICA. SICA can't fire him. SICA never employ him. What's going to happen? Yes, if he's found guilty and found negligent, he can get struck off. If he gets struck off, he can't practice in the whole country as a CA. Okay, then you would find that if it was something minor, but if it gets a bad reputation, you will find companies won't want to appoint his company to do audits. So if he was found negligent, and if you hit the headlines in the newspapers and so on, you're not going to get business. You're not going to, because you get to do the business. You're going to find that you could lose clientele. People may not want to give you their books to audit. So basically, look at it. It is in your, those of you using New Era textbook, etc. Those answers are all there. Go through it. Spend a few minutes, read it. I'm telling you, you will be sorted out with the section on the audit report. You shouldn't have any problems with that. Okay, now let's look at the next question, where the bigger questions now. And that's question 2, company financial statements. Can you just make this? Okay, now question 2 is dealing with financial statements. That is a statement of comprehensive income. The old name was income statement. The new name is statement of comprehensive income. Okay, now listen, don't take a chance. I'm appealing to you, do not take a chance. Don't say, will an income statement come out or will a balance sheet come out? Go through it properly. And because now you are writing 2 papers, the examiner has enough time to test you on a full income statement, and he can test you on a full balance sheet if you want. Don't go into the exam room and you can't set out an income statement or you can't do a balance sheet. Statement of financial position. The new name for our income statement is statement of comprehensive income. Now let's look at this and let's look at the adjustment. And of course, you can see 2.1 tells you statement of comprehensive income. 2.2 tells you retained income note. No paper is going to be complete. I'm telling you, you will definitely get your retained income note. You must be prepared with the ordinary share capital note. You can work out the whole paper. You can work out the whole paper if you've been working through some of the past papers. You know the important aspects. And even now, looking at this income statement, go look at the last 3, 4, 5 years of papers. You will find that the first thing with regard to sales and cost of sales, they will leave out a figure or 2. I suggest you sit down, you think about it, and you try and work it out properly. Because you cannot take a chance. Because once you go off with the sales or cost of sales figure, you're going to find now that you're only going to start picking up method marks because your totals are all incorrect. Then you will get marks, but you're not getting the full total marks. So I suggest be careful. Okay, let's just look at this question. It reads, the information relates to Zozi Pty Limited. Pty Limited is a private company, right? Proprietary Limited, a stationery retailer for the year ended 28th Feb 2021. So my year ended on the 28th of Feb 2021. So obviously the year started. Just go one day, the next day, and go 1 year back. That means my year started on the 1st of March 2020. Now, I know lots of our questions, 1st of March, 28th Feb, 1st of March, 28th Feb. Don't be surprised in the exam, in the final exam, they suddenly put 1st of July, 30th June. You must read, check the dates. So you will find that you don't make mistakes with when you're counting the number of months. Okay, let's just look at the first thing. They said they want us to prepare the statement of comprehensive income. That was 36 marks. 7 marks was for the retained income note. And then they asked us for the equity and liability section of the statement of financial position. That's part of the balance sheet, right? So they didn't ask for the entire balance sheet. They just asked for the part of the balance sheet where we can see there's it there, your retained income note and equities and liabilities section. Now, the other thing is, now you know that's the aspect that they're asking. You must remember one thing. See, you're always fighting for time. In accounting, they always keep saying that the paper is too long. It's not the case of the paper is too long. It's a case that you are too slow or you don't have a good strategy. When you read something, don't say, I will come back to it. Go and record it wherever it goes. I'm telling you, you'll be sorted out. You'll be fine. If you listen to what I'm telling you, apply the simple rules, and you're going to find that you will be sorted out. Okay, let's look at the adjustments and additional information. Or let's look at first the nominal accounts. Sales, they gave me 5,808,000. So I go to my statement of comprehensive income, I've got sales. Now, remember a simple rule. Do not put the figures in the money column. Do not put any figures in the money column. You write everything in brackets next to it. You will find that you won't need an eraser, you don't need to Tipex, because you're not going to make a mistake. Put it next to it. So I've got sales. My sales figure is 5,808,000. So open brackets next to sales, going to write down 5,808,000. Then I've got cost of sales, question mark, no problem. So we'll come back to cost of sales. Depreciation, 86,010. They entered it in the income statement for us. That's sorted out there. Insurance, go under operating expenses. You've got insurance, 37,200 in brackets. Next to or below depreciation, you're going to write down insurance, 37,200. Discount received, it's an income. Okay, they've recorded that for us. Discount received, I've got 14,000. Rent income, under other income, below discount received, write down rent income, 139,500 in brackets next to it. Don't put it in the money column. Directors' fees is an operating expense. So under operating expenses, you will write down directors' fees, open brackets, 450,400. Salaries and wages, operating expense, 492,600. Write it in brackets. Next to it, audit fees, that's the auditors, their fees, 85,700. Operating expense, record that in brackets next to it. Interest income, go right to the bottom above net profit before income tax. Below, or at least I've got interest income recorded, the operating profit. I've got interest income 23,400. They recorded that for us. Then I've got sundry expenses. There's a question mark, no problem. And then ordinary share dividend, that's your interim dividend, 126,000. Now listen to me and listen very carefully. I find learners, you know, if you don't practice your statement of comprehensive income, they're going to slot anything and everything. Now you can't afford to do that. Now ordinary share dividend, they in fact made it easy for you. They even wrote interim dividend. Don't you ever put ordinary share dividends in the statement of comprehensive income. It doesn't go in the income statement. That interim dividend is going to go to retained income note. Let's go to the retained income note. In the retained income note, I've got balance on the 1st of March 2020. And if you look at it, it's there on the screen. I've got the net profit after tax. And then they've got a blank line over there. That most likely is for a repurchase of shares. Then I've got ordinary share dividends. They wrote interim dividends. They filled in the figure for me. But if they don't, then you should know that ordinary share dividend, that's your interim meaning the dividends that you paid your shareholders during the year. You're trying to keep your shareholders happy, so you paid out 126,000 to them. That's interim. And below interim, while you're there, fill it in, write down final dividends. So on that line, you're going to write down final dividends below interim. I don't have the figure, no problem, but I wrote it down, final dividend. Then I've got balance on 28th of Feb. Now my retained income, they gave me a figure of 204,040, that's 204,040, but I'm not writing it down, balance on the 1st of March, because just in case there's an adjustment to it, maybe there's something there. So I'm not going to write it until I read the adjustments. Okay, let's start with the adjustments. The very first adjustment. Somebody asked a question. Oh, too fast. All right. Okay, I'm going to slow down in case you're writing. Okay, let's look at the adjustments and additional information. They said goods returned by a debtor, 28,800, was not yet recorded. So a customer, a debtor, returned goods for 28,800. The goods were placed back in stock. So we took the goods, the customer brought it, we took it and we put it back on the shelf because we're going to resell. But no entries were made to record this transaction. So we never recorded. The goods are back on the shelf, but we never recorded. A profit markup of 60% on cost is applied to all sales. So our markup that we're working with is 60% on cost. Okay, so now I need to work this out. Now, what did they give me? Firstly, the goods returned by a debtor, 28,800. Now, when you sold the goods to the debtor, you charged him the selling price. You charged him the selling price of 28,800. What was the cost price? It's 28,800 times 100. I'm looking for the cost times 100 divided by 160. It's 28,800 divided by, times 100 divided by 160, and that will give you your cost price of the goods that were returned by this customer. Now, what are the entries that we're going to do? Let's now go to my income statement. In my income statement, my statement of comprehensive income, I've got sales. I charged the customer 28,800. So I'm going to put next to sales, I already got a figure of 5,808,000 in brackets. I will put next to it minus 28,800. 28,800. Then for cost of sales, I don't have the cost of sales figure because they put a question mark, but I will write next to it minus, and the cost price of the goods that were returned by the customer. And when you work it out, you should have got an answer of what? 18,000 rands? 28,800 times 100 divided by 160 gave you the cost of sales figure of the goods returned by this customer, which was 18,000. Now, they only asked me for the equity and liability section of the balance sheet. They didn't ask for the whole balance sheet, that is the statement of financial position. They didn't ask me for current assets. But I am telling you, what you need to do what you must do is you go to debtors control. Go to debtors control in the trial balance, the pre-adjustment trial balance, and go right over there, minus 28,800. They gave me net trade debtors of 463,000. Look at the pre-adjustment trial balance. You've got 463,000 there. Next to it, go and put there minus 28,800. 28,800. Picking up there. So 28,800. That I'm going to decrease my trade debtors. Now, what about the fact that the goods came back? They said goods returned by a debtor was not yet recorded. The goods were placed back in stock, but no entries were made to record the transaction. Go to trading stock. Go to trading stock. And by trading stock, you're going to put the cost price of the goods, which was 18,000. Okay. Yes, we're going to decrease our debtors. We're going to decrease our debtors, and we're going to decrease our sales figure with the selling price. We're going to decrease cost of sales with the cost price. And we're going to add, we have to add to the trading stock figure because they said no entries were made. No, the transaction was not recorded. So to answer the question, do you add to the trading stock? Yes, I'm going to add the figure to the trading stock figure because that's the figure I got in my trial balance. And they said no entry was made. So if you want me to repeat the transaction, I'll go through it very quickly. Sales is going to go down, minus from sales, the selling price. That was 28,800. Go to cost of sales. In your statement of comprehensive income, you're going to say minus 18,000 rands. That was the cost. How I got 18,000? It was 28,800 times 100 divided by 160. Gave you the cost of the goods that were returned. Now the stock came back. My trading stock figure must go up. So on the question paper, I suggest, because they didn't ask for the entire financial statement, but you go onto the question paper and you must write it because you will forget later. Because you know that later on, they're going to ask us to work out trading stock surplus or deficit. Now, if you didn't adjust your stock figure, you're going to have a problem. You also know that for the debtors, they're going to ask you to adjust the provision for bad debts. They'll ask you to adjust the provision for bad debts. Now, you might as well update the debtors control figure so that the provision can be adjusted accordingly. So what you need to do is you need to make sure on the question paper, go and write it right there by debtors control, minus 28,800. Go to trading stock, go and put plus 18,000. So that will take care of the first transaction. That should. So let's move on. Let's move on to the next adjustment. They said insurance includes an annual premium. Straight away, the moment you see annual means 12 months. Don't slip up. Insurance includes an annual premium of 14,400 paid for the period 1st of April till 31st of March. Take 14,400 and divide it by 12. Divide it by 12 and see how much is it per month. So when you take 14,400 and divide it by 12, what you get? 1,200 rands per month. You should get 1,200 rands per month. 1,200 per month. Okay. Now, my year starts on the 1st of March and ends on the 28th of February. But this policy, I took it out on the 1st of April, and it's carrying on until the 31st of March. Now, March is after my financial year. My year ends on the 28th of February. So this policy, this insurance is paid for one extra month, that is March, which falls in the next financial year. It falls in the next financial year. So what must I do? I need to remove the 1,200. This is an expense which I paid for in advance, which is prepaid expense. It's an asset. Let's all go to the income statement, and it's a statement of comprehensive income. Let's go to our statement of comprehensive income. Under operating expenses, you got insurance. You got open brackets. You already have 37,200. You got 37,200. Next to it, go and write minus 1,200. I need to take out the 1,200. It is not an expense for this year. That one extra month that we paid for next financial year, it must be allocated to the next year. So take 1,200 out from the statement of comprehensive income from insurance. That's prepaid expense. If I was doing trade and other receivables note, if I was doing trade and other receivables note, then I would have said under current assets, under trade and other receivables, I would have had prepaid expense 1,200. Yes, 36,000 is the correct figure that you will slot into the money column. That will be your final answer for insurance. Right, let's look at the next one. The next one now, you can use your scientific calculator, you can think about it logically, but you need to be very careful how you work it out. Okay, let's read it first. The tenant paid the rent up to 30th of April. Note that rent was increased by 15% with effect from the 1st of July 2020. The premises were occupied since 2018. Now, you know what? Don't get misled or don't misunderstand when they tell you the premises were occupied since 2018. The examiner is sending you around the door, he's trying to see whether you're going to start working from 2018. My year starts on the 1st of March 2020 and it ends on the 28th of February 2021. That's my 12 months. Those are the 12 months that I want to work with. The tenant was there on the 1st of March 2020. He's there on the 28th of February 2021. He was there for the full 12 months. Don't go back and start working from 2018 anything. Now, I need to do some calculations. I need your help here. You need to work these things out. Now, firstly, they told us that the rent was increased by 15% with effect from the 1st of July. In March, I charged the tenant normal rental. The tenant paid me March, April, May, and June. 4 months, I was charging the tenant normal rental. No increases, nothing. But the moment July came in, I told the tenant I want 15% more. I want 15% more. So my rent went up by 15%. So for the first 4 months, I'll show you the calculation now on the board. So what we need to do is firstly, let's just get our bearings right, and I will do the calculations for you. Okay, so firstly, March, April, May, and June, 4 months, I was collecting normal rental. In July, I increased it by 15%. So the tenant paid me my normal rental in July plus 15%. So July, August, September, October, November, December, January, February, and then the tenant paid me in advance for March and April. So in total, the tenant paid us for 14 months. Let's get our bearings right here. 4 months, he paid normal rent. 10 months, he paid us with an extra 15%. So in total, he paid us for 14 months. Now I need to remove 2 months from there. So let's look at some calculation. So I'll say now that for 4... For 4 months, the tenant paid you normal rental. Let the normal rental equal to 100%. When you start with anything, you start with your base, the 100%. Let it equal to 100. I'm going to show you a simple calculation. So if you can work this out, 4 months the tenant paid us normal. This was my old rental. That was the old rental. For 4 months, the tenant paid old. Then the next 10 months, we increased the rental by 15%. So I'm going to say 100% plus the 15 I added on, 115%. Okay. So now I got for 4 months the old rent. For 10 months, he paid me new rental, 115%. That means the tenant paid me for 14 months. Now, I'm showing you a simple calculation. You can work this out. Those of you are quite clued up with your scientific calculators. You can put the equation in, you'll get your answers. But this is for the learner that just needs to understand how to work this out. What is 4 times 100? It's 400%. What is 10 times 115? It'll be 1,150. That means for 14 months, what percentage points did I collect? Work this out. Add it up, 0, 5, 5, 1. There's nothing complicated I put on the board. I said for 4 months, the tenant paid me normal rental. He was paying 100% every month. Every month he was paying me diligently. He paid me the rental. I collected 400% in terms of percentage points. For 10 months, I shot the rent up. I increased it by 15. So it became 115%. 10 times 115 came to 1,150%. That means for 14 months, I collected 1,550%. Now let's equate this to the rand value. My rent income, I collected 139,500 in terms of rental. So let's do this. Let's say 1,150% is equal to, because that's the percentage points for 14 months that we collected. That 1,550%. That's what I collected for 14 months. Equate this to the rand value. The rand value for rent income was equal to 139,500. Look at what I've got on the board. There's nothing complicated. There's nothing complicated. 4 months. This adjustment is in the exam always. It comes out. Okay, if they want to make it easier, then they won't give you the percentage, then they'll give it the rand value. We'll look at that as well. So for 4 months, I collected 100%, that was 400%. For 10 months, I increased the rent by 15%, so it became 115. That came to 1,150%. So for 14 months, I collected 1,550 percentage points, if you want to look at it. And that, if I equate it to the rand value, it came to 139,500. So I'm saying that 1,550% is equal to 139,500. It's the same as telling you, like, in grade 4 and 5, you did apples. 1,550 apples cost me 139,500. What is the cost of one apple? Work out 1%. What is 1%? What is one apple if it was apples? I'll say 139,500 divided by 1,550. And tell me, what does 1% come to? Thank you. So 1%, if you work it out, it came to 90 rand. Very good. 1% came to 90 rand. So if 1% is 90 rand, then 2% would be 2 times 90. 10% would be 10 times 90. The new rental was 115%. So what is 115%? 115 times 90. So 115 times 90. And you'll get your new rental, which comes to what? 10,350? $10,350. That's my new rental that I charged the tenant. 10,350. Now look at the calculation that I did. Nothing complicated. You don't need a scientific calculator. You just think logically and you'll be able to get your answer 10 out of 10 times absolutely correct. You're not going to slip up. Because we bring it down to 1%. I want to know what is 1. If 1,550% is 139,500, then I want to know what is 1%. I bring it down to 1 first, and I know 1% equals to 90 rand. So what is 115%? Plain and simple, Fatima Malik. What you need to do is just simply say, if 1% is 90 rands, what is 2%? 2 times 90. What is 20%? 20 times 90. It's plain and simple. Okay, to answer the question, I'll come to your question right now. Let's just finish this. So the new rental is 10,350. Now what must I do? The tenant paid me the rental in advance for 2 months, March and April. So 10,350 times 2, it will be 20,700. Let's go to rent income in the income statement. That's your statement of comprehensive income. Go by rent income. You got 139,500. Next to it, put minus 20,700. Minus 20,700. This is money received in. I'll do the decrease for you right now. Okay, I'll go through it over again. But in the statement of comprehensive income, all of you look at the statement of comprehensive income. You got rent income And next to rent income, you got 139,500. Next to it, put minus, put 20,700. That was the 2 months rent that you received in advance. Now, what you need to do is remember that the 20,700, you get 360.
No.
The figure, some of you are putting it up there, it's 10,350, not 60. It's 10,350, which will be the calculation. 10,350. Yeah. The 10,350 is the figure with the increase. Okay, now this is money received in advance. It's referred to as deferred income under trade and other payables. Under trade and other payables, deferred income, you're going to put 20,700. 20,700 deferred income. Okay, let's just run through that for the benefit of one or two of you. Yes, Brandon, 10,350. That's the new rental with the increase. Okay, now I said the tenant paid you 4 months old rent. That was 4 times 100%. You increased the rent by 15, so it went to 115. Your base, your starting point was 100%. You went up from 100 to 115. The 10 months, the tenant paid you 115% each month. So we calculated 4 times 100 was 400%. 10 months was 115, came to 1150. That means for 14 months, he paid us 1,550%. If I equated it to the rand value, I got 139,500. The figure was supplied, it was given. Then I said, okay, let's see if 1,550% equals to that figure. What will be 1%? So I divided and I got 90 rands. If 1% was 90, the new rental was 115%. So 115 times 90 gave me 10,350. And that figure, 10,350, was the new rental for 1 month. The tenant paid us 2 months in advance. I need to minus it. So that made it 20,700. And I took it out from my rent income in the income statement. Now to answer one question over there, they said if the rent was decreased, a very good question, because then that possibly can come out. What if they said that the rental you charged was the same figure, for the first 4 months it was normal, and then with COVID coming in and people losing their jobs and so on, you decided to decrease the rental by 15%. Now think logically. I was giving you a hint when I said your base, your starting point was 100%. You started with 100. So the tenant was paying you normal rent. So for the first 4 months, he paid you 100%. Yes, whoever's put that answer up. Now you decreased it by 15. So you will go from 100, you go down 15, that means you will go down to 85%. You will then go down to 85%. Yes, and now you say for 10 months, the tenant paid you 85% every month. You will say 10 times 85, and then after that, all the calculations are exactly how I showed you, and you will come down to 1%, and then you multiply it by 85, and you will get the rent income. Okay, so I hope that answers your question. That you will, from 100, you move down to 85. Don't you start with 115 and go down to 100 and so on. Your starting point yes, you have to subtract it, which we subtracted the rent, the 20,700 in our example. I'm answering the question there. 20,700, I told you in the statement of comprehensive income, from rent income, 139,500 minus 20,700, and you're going to then put your answer in the money column, and 20,700 is deferred income. It's 20,700 because 1 month it is 10,350. For 2 months, take 10,350. The tenant paid us for 2 months in advance. So multiply that by 2, and you're going to get 20,700. That's the money you received in advance. The tenant paid you 2 months in advance. Okay? You're going to minus the 20,700 in the income statement. Okay, I hope that answers most of your questions. We'll see again at the end if there's anybody still has any issues. I can go through it with you. It's not a problem. It's not a problem. Okay, so just remember the tenant paid you 2 months in advance, so you must take it out. Okay, now if I had to take the very same thing and just make it a little easier, and they've been doing that recently. They've been doing that recently where the old rent. Who can tell me, if you can type up quickly, anybody, what was the old rent before you increased it? The new rent is 10,350. What was the old rent? When the year started in March and April and May, yes, it was 9,000. Work 15% on 9,000, add, yes, 9,000, spot on, Darabai. It was 9,000 because I can say 100, the original rent was 100%. 100 times 90 will give me 9,000 rent. So now let's do this. Same adjustment. I'm going to take the very same adjustment. They say the tenant paid the rent up to 30th of April 2021. Note that the rent was increased by, now instead of giving you 15%, they may tell you the rent was increased by 1,350 rand with effect from 1st of July. Okay, so I'm giving you the same example, but I'm just taking out the percentage and I'm giving you the rand value. What if the question read, adjustment number 3, I'm reading it, but I'm substituting. The tenant paid the rent up to 30th of April 2021. Note that the rent was increased by 1,350 rand with effect from the 1st of July. Now, how would you work it out? This is what you're going to simply say. You'll say, okay, that means for the 4 months, that was March, April, May, June, the tenant paid us the normal rent. I don't know what the normal rent was, right? But in July, I increased it by 1,350. So now what do? I say in July, yes, there is a quicker method. I told you if you use your calculators, you can do it quickly as well. But this was a simple explanation to the learners. Okay, let's move on. So then in July, August, September, October, November, December, Jan, Feb, March, and April. 10 months, I increased the rental. I increased the rental by 1,350. Now, ask yourself the question. If you did not increase the rental, then you would not have collected the 1,350 rand extra for the 10 months. So what must I do? I will say that means 10 times 1,350, you wouldn't have collected that money. If you never increased the rent, you wouldn't have got the 1,350 extra each month. Now 10 times 1,350 will equal to, that's 13,500. 500. I wouldn't have got 13,500 rands extra. Right, now let's look at how much did the tenant pay us. The tenant paid us an amount of 139,500. The tenant paid us 139,500. That's with the increase. But if I did not increase the rent, I wouldn't have got 13,500. I wouldn't have got that money. So let's take it out. How much I would have collected if I did not increase the rental. It's 139,500 minus the 13,500, and that would give me, what is 126,000? I would have collected 126,000 if I did not increase the rental. Now, take 126, that's for 14 months. Take 126,000 and divide it by 14. Divide that by 14 and tell me what's your answer. 126,000 divided by 14, and you come right back to 9,000 rands. You come to 9,000 rands. That means the 9,000 was the old rental. Now you increased it by 1,350. Now add the 1,350 to the 9,000. 9,000 plus 1,350 will give you 10,350. That was the new rental. Old rental 9,000, new rental 10,350. Take 10,350, multiply it by 2, will give you 20,700. Go to your statement of comprehensive income and remove 20,700. It's not supposed to be there because it was for the next financial year. That's deferred income, trade and other payables. That's your note number 9, trade and other payables. And you're going to put deferred income, 20,700. I hope that clears up that adjustment. And you know that you must get these adjustments. You get a statement of comprehensive income. If you're going to get the statement of comprehensive income, these adjustments are repeated over and over again. So I suggest you practice these things. Okay, let's look at the next adjustment. Adjustment number 4. Now, the next adjustment reads, the bookkeeper omitted. Omitted means left out. The stock of calculators in compiling the trading stock figure reflected on the pre-adjustment trial balance. So now what happened? He left out the stock of calculators when he was drawing up or when he was getting the trading stock figure. So the figure that I got in my trial balance, the figure that's in your pre-adjustment trial balance, it does not have your figure for, it does not have the figure for your calculators. A summary from the stock records of calculators is as follows. I had opening stock 600 units. I purchased during the year 2,200. Returns 180. Units sold 2,160. Closing stock 430 units. Okay, now he didn't record the closing stock. Now to give you a whole lot of information over there. Now you need to make sure that you have to calculate the value of your closing stock. You want to calculate the value of the closing stock. That is the value of the calculators. The relevant sales figure was recorded. So what I sold was entered. Calculators are purchased at a fixed cost price of 175 each. The specific identification method is used to value the calculators. Now, they're testing your stock valuation system here. they're testing your stock valuation system. So let's quickly run through that. You've got the first in, first out method, FIFO or FIFO, like some of you like to say. That's first in, first out. The second one is the weighted average method, where we work out the average price. And the third one here, where they said the specific identification method. Specific identification, you identify specifically exactly what is left. You identify specifically what is left. Okay, so now I need to work out the value of the closing stock. I've got 430 units left. The calculators are purchased at a fixed cost price of 175. So I will simply have to say 430, that's how many units are left. 400 times the price of one was 175. So 430 times 175 comes to the figure of what? 75,250. 75,250. Now, this was left out of the stock sheets. This was left out of the stock sheets. So what I need to now do, go to your trading stock in the trial balance. Go to your trial balance. You've got in the trial balance, you've got your trading stock figure of 882,000 in the trial balance. Go and add plus 75,250 there, because it was left out. It was omitted. Okay. Now, I need to work out, they said that there were some calculators that were stolen. This must still be recorded. It was noted that calculators were stolen. This must still be recorded. Think logically. I started with 600 units. So you had 600 units. Okay, so I had 600. Then you went and purchased 2,200. You went and bought 22. And that would have meant that you would have had 2,800 units to sell. But you returned minus 180. You returned 180. So you were left with 2,800 minus 180 will give me 2,620. I had 2,620 units to sell. I sold 2,160. So you had 2,620 units to sell. You sold 2,160. I sold 2,160. So I should have left over unsold. The difference. Subtract that figure. That should give me 6. I supposed to have 460 calculators left over. Those of you that got 30 units stolen, spot on, you got it absolutely correct. I supposed to have 460 units unsold, but according to the stock records, we only got 430. 30 took a walk, 30 disappeared. Okay? What was the cost price of one calculator? 175. So 30 times 175, 30 times 175 will tell you exactly how many stocks, how many were stolen. That was, yeah, some of you put the answer up, correct, 5,250. Take the 5,250, it's gone, it's missing, stolen, lost due to theft. Statement of comprehensive income. Go to your statement of comprehensive income, and under operating expenses, you're going to write there So I'll answer the question now. Yes, it definitely took a walk. So you're going to write loss due to theft, loss due to theft, and you're going to put the figure 5,250. 5,250. Now, our trading stock figure in the trial balance, we said that we had to add the 75,250. That was the value. That was the value of the calculators that were left over. The 430 calculators that was not yet entered. The trading stock deficit, yes, if you want to put trading stock deficit, no problem with it. It's fine, provided you have the amount of 5,250 in the money column. Trading stock deficit or loss due to theft. Okay, I'll try and slow down. I see some of you are saying that you can't cope. What do you do with the lost units? You record it in the statement of comprehensive income under operating expenses. Under operating expenses, loss due to theft. That's Masibonge Gamed. You will put it in the statement of comprehensive income, loss due to theft, and you write down the amount, which we said was 5,250. 5,250 is what you lost. That's how you're recording it. So that's what you do with the lost units. You put it as a loss in the statement of comprehensive income. Okay, let's move on to the next adjustment. The company employs 3 direct. Yes, I did say that we can say trading stock deficit. No problem with that. It is a shortfall, it is a deficit, you can record it. Okay, now let's read the next one. The company employs 3 directors on the same fee structure. Those of you who have been working on past papers and so on, you will come across this so often. Same thing, they keep asking these questions. You need to sit down, and you need to think logically. And I'm telling you, I can't see the question. Come, let's move on now. Let's move on. It says, I'm reading the next adjustment, number 5. The company employs 3 directors on the same fee structure. That means they're getting the same salary. Director's fees. One of these directors did not receive his fee for February. So 2 of them got their fees for the 12 months. The third one, he never get his fee for February. That means he got for 11 months. Now, a 4th director appointed on the 1st of December earns 3,200 rands per month more than the other directors. He received his fees for the current year. So he got it for the... Okay, then let's move on. So now you've got a 4th director. He's getting 3,200 rands per month more than the other directors. And he received his fees for the current year. Now this one here, you'll need to think clearly, you need to think logically to be able to work this out. So let's start at the beginning. Okay, so now we are saying you got 3 directors. Now think with me. I need you to think with me. So you got 3 directors. 2 of them, they earned their salary, the director's fees for the full 12 months. For the full 12 months. That comes to 24 months. The one director, he got his fee only for 11 months. He only was paid for 11 months. So that would be 11. So the three of them, they collected director's fees, 24, 34, that's 35 months. If I have to look at it in terms of months, how many portions of that salary was there, the director's fees? So the three of them, they collected for 35 months, if I have to put it in terms of months. Now the fourth director, he came in. Now this is similar to what I explained to you earlier with regard to the rent. Think logically. A fourth director appointed on the 1st of December. He got paid for December, January, and February. My year ends in February. He received his fees for the current year. So he got his fees for the 3 months. But he had 3,200 rands per month extra. What if I never give him the 3,200? Let's talk along those lines. What if we didn't give him 3,200 extra? So he would have got for 3 months, that was for December, January, and February. What is 3,200 times 3? That is 9,000. It's 9,600. So he got an extra 9,600, and he got for 3 months. So that 1/4 director, he got for 3 months. That means we paid for 38 months. I paid out for 38 months. How much did I pay out for the 38 months director's fees? We paid out 450,000. Go find it in your pre-adjustment trial balance. You got director's fees 450,400. But inside the 450,400 is the fourth director that got 9,600 rands extra. Let's take out his extra amount. Let's take out that extra amount, which is 9,600. How I got 9,600? He was paid 3,200 rands per month extra above the others. So for December, he got an extra 3,200. January, he got an extra 3,200. March, he got an extra 3,200. 3,200 times 3 months is 9,600. Let's say if we never give him an increase, let's say we didn't give him the extra 3,200 rand, then we would have only paid out an amount of 440,800. I would have paid out only 440,800 to the 4 directors. Now, here in the 440,800, all the directors are getting the same amount. Take that figure and divide it now by 38 months. Divide it by 38 months. And when you divide it by 38, because I told you the 2 directors got 24 months, one had for 11, we got 35 months, and the one was 3 months, 38. So we said it is 11,000. When I divide, it comes to 11,600 rands. That was the director's fees. That was the director's fees per month for each director. That was those 3 directors. Now, we never paid the one director. He was getting the normal. He was getting the normal director's fees. Okay, just to quickly answer the one question there, why 38 months? The 2 directors got their fees for 12 months and 12 months. 2 times 12 is 24 months. The one director, the third one, he only collected for 11 months. He never get for February. So 1 times 11 is 11. Now what is 24 plus the 11? Gives you 35. It gives you 35 months. Now once you got the 35 months, there's it over here, I said 35 months. Then a fourth director, they told you employed a fourth director and he only came to work in December. So he must get paid for December, January and February. So he gets paid for 3 months. So that's the 3 months that I got over there. So 35 plus the 3 came to 38 months. That's the amount or the number of months that we paid out for the 4 directors. 450,400. That's the cash that left the business. There were 38 shares in there if you want. So then the one director, we said he got 3,200 extra, so I had to take it out. So I removed 96 and I was left with 440,800. 440,800 that was paid out for 38 shares if you want. So what was one share? One share was 11,600, and that is the money that you owe the one director because you didn't pay him his February director's fees. Now let's all go to the statement of comprehensive income. You got director's fees. You got director's fees, and the figure that we got in bracket for director's fees from the statement, from your pre-adjustment trial balance, you got 450,400 plus 11,600 plus 11,600. That's the figure you're going to put in the statement of comprehensive income. That's an interesting adjustment. I suggest you go through it properly when you're sitting down quietly on your own and figure it out properly. If you get something like that, you should be able to score good marks with it. Now, this 11,600, I didn't pay it. I still owe the director money due, not yet paid. Money due, not yet paid is expenses payable. We do enter the fourth director. Expenses payable, that's your accrued expense. Some of you in your schools, you're writing accrued expense. Others may write expenses payable. It's all acceptable. Under trade and other payables, accrued expense, 11,600. To answer the one question over there, the fourth director got paid. There's no money owing to him. There's no money owing to him because they told us clearly a fourth director appointed on the 1st of December earns 3,200 per month more than the other directors. He received his fees for the current year. There's nothing to do about the fourth director. I only needed to use his director's fees to arrive at my answer. He got paid. He was sorted out. Okay, come, let's move on. We need to move on, but we're not going to finish. The next one. The salary of the clerk on leave was omitted. Omitted meaning left out from the salaries journal. Details of his salary is as follows. Now, please make sure you understand this adjustment. It comes out all the time. Just keep up with me now. We can always go back to other questions. Otherwise, you're going to find that you'll still be chasing me all the time. Rather, just keep up with me. We're all looking at the next adjustment, number 6. The salary of the clerk on leave was omitted, left out from the salaries journal. Details of his salary is as follows. They gave me the net salary. Now, net salary is arrived at by taking the gross salary minus the deductions, gives you net salary. Now, if you left out the employee from your statement of comprehensive income, I need the gross salary. I need the gross salary. You must remember, you as the employer, you as the boss, you are liable to pay out in terms of salaries the total figure, which is gross. Net salary is the take-home pay, what the worker is going to take home. But you need to understand that it's costing you as the employer the gross, and then I'm still going to come to contributions, additional contributions by the employer. Now, let's see if you can work this one out for me. The salary of the clerk on leave okay, we'll try to put the child balance up. They don't have it. They said the net salary was 9424. The total employee deductions was 24% of the gross, and the employer contributions was 1,240. Now I need the gross salary. Let's see if somebody can put up the figure. Okay, I see 12,400. Let's see how you got that. Now, what I need to do is I need to understand okay, to work it out, they told me that 9,424 was the net salary. Yes, that's very good. Some of you put it up. That's brilliant. Well done. You got 9,424 was the net. I want the gross. The gross is, I keep telling you that every time you want, your starting point is the 100%. Your starting point is the 100%. So 9424 is after deductions. So the deductions were 24%. That means the 9424 is equal to 100 minus the 24, which would have been 76%. So 9424 represents 76%. Bring it back to the original, that is the 100%. So I would say 9,424 times 100. That's what I'm looking for. That's what I want. I want the 100 divided by the 9,424 is the 76% divided by 76. Now, when you work that out, you would get an answer of 12,400. Those of you work this out, you should get 12,400. What did I just work out? I worked out the gross salary. Test your answer. If you want to test it, take 12,400 and work out either 76% of 12,400 and see the figure that you get. You must come back to 9424. If you don't, then you got a problem. Or work out 24% of 12,400 and then subtract it from 12,400, and you must come back to 9,424 rands. Okay, now my gross was 12,400. Take the 12,400, go to your statement of comprehensive income. Under operating expenses, you've got salaries. And my salaries figure was, salaries and wages, was 492,600. In brackets, next to it, go and add plus 12,400. 12,400. That's the first figure. Now, what about the employer's contribution? What about the employer's contribution? Let's go and add the employer's contribution. What did the employer contribute? How much did the employer contribute? They said the total employer contribution was 1,240. What you need to understand, see, when you employ somebody, you tell them that I'm going to pay you 12,400 Rand a month. That's the gross. But you need to explain to them that from the gross, you're still going to take out, not for yourself, you are the boss, you are the employer. You have to take 12,400 and put it one side. That's the worker's money. Then from his money, you have to take out SARS, big brother. He wants a share. So you've got to take out SARS, PAYE, pay as you earn. So you take out that. From the worker's money, you're going to pay that to SARS. Then you're going to take out for medical aid if you got pension fund, you're going to take out UIF, unemployment insurance fund. But it's costing you 12,400 to employ him. That's the first part. Then the government also says that you, the boss, must also add to the UIF, and you must add maybe to the pension, and you must add to medical aid. So what does it cost you to employ this worker? It is costing you 12,400 plus your contribution of 1,240. So in the statement of comprehensive income, go and write down, you've got their salaries and wages, you've got the figure in brackets, plus 12,400 plus 1,240. The employer's contribution is 1,240. They gave it to you in the column over there. Total employer contributions, 1,240. Yes, remember, simple rule, I'm telling you, if this adjustment comes out, you can score 5 or 6 marks because we tell you so many. Take the gross salary and add it in the statement of comprehensive income. Take the employer's contribution and add it over there, 1,240. You're going to take the gross and add it in the income statement. Take the employer's contribution and add it in the income statement. Now, we never paid this worker. We left him out of the salaries journal. We still owe him. In this example here, yes, we're going to add the employer's contribution to the salaries and wages account. They didn't give us a separate employer contribution. Normally, sometimes they might tell me the question, you got pension contribution, you got medical aid contribution, then you can add it over there if you know what it is. In this example, they told us in the question, if you read right below that adjustment, employer contributions are debited to salaries and wages. So debited to salaries and wages. So I am adding the employer's contribution to salaries and wages, 1,240. Now let's go to trade and other payables. I still owe my worker his money. How much do I owe him? I owe him his net salary. So under trade and other payables, I will say creditors for salaries, creditors, people I owe money, creditors for salaries, 9,424. 9,424 plus what were my deductions? The 24% that we worked out. What is 12,400 minus 9,424? 12,400 minus 9,424. That'll give you what? 2,976. 2,976. Take 2,976 and add it. Now, if you look at the current liabilities, you've got trade and other payables. They give you a wide lines over there. You should rather add it over there by trade and other payables, because you need lines for maybe current portion of loan, you need a line for SARS, income tax, you need a line for shareholders for dividends, And if you have a bank overdraft, we need it there. So we would put this under trade and other payables. Under trade and other payables, you're going to have 9,424 plus the 2,976, which was the deduction. Basically, what I'm telling you is that under trade and other payables, you're going to have 12,400 because that's what it costs you to employ this worker, plus your contribution of 1,240 plus 1,240. So under trade and other payables, on the notes to the balance sheet, you've got trade and other payables, you're going to have either, you can write 9424. I'll come to that question later. We'll be dealing at the moment with our salaries. So you're going to have under trade and other payables 12,400 plus the contribution of 1,240. Okay, let's look at the next adjustment, number 7. Okay, if I have to summarize it, basically, take the gross salary, go and record it in the statement of comprehensive income. Go to the statement of comprehensive income, take your salaries and wages, and you're going to say plus 12,400, the gross plus the contribution, plus the contribution. Then go to the trade and other payables, and trade and other payables, you will put the net salary plus the deduction plus the contribution. And that's how you would record it over there. Okay, let's quickly move on to the next one or two adjustments. Okay, let me quickly go to the next one. An adjusted assessment was received from the external auditors stating that audit fees for the year amounts to 80,500. Okay, now they are telling you it was 80,500. Go look for directors' fees. Sorry, what auditors' fees? The audit fees was 85,700 in the pre-adjustment trial balance. So in the pre-adjustment trial balance, you got audit fees 85,700. That's the figure you got in your statement of comprehensive income. Audit fees in brackets, you wrote 85,700. You wrote 85,700. But now the adjustment is telling us, that you received an adjusted assessment, and they're telling you that the audit fee should only be 80,500. That means in my money column, my answer is 80,500. That's what the figure is supposed to be, 8,500. It means you paid extra to the auditors. This is an expense which has been paid for in advance. So I need to minus from here. The figure will be 5,200. So 85,700 minus 5,200 should give me 80,500. That's my audit fees. The 5,200 I have paid for in advance. Yes, it is a prepaid expense, but it's not going to go under equity and liabilities. That's a current asset. It will go under trade and other receivables. But they didn't ask us for that over here in this question. So trade and other receivables, you would put prepaid expense, but not on the answer sheet over here. Okay, the next one, the loan statement from Luther Bank revealed the following. Total repayments for the year, including interest, 258,000. So that was your total repayments for the year. Then they told you interest is capitalized. That means it gets added to the loan account. Then the balance on the 28th of February 2021 was 1,082,400. Now you need to calculate the interest. you need to calculate the interest that you had paid. You paid out a total of 258,000. Now let's look at our pre-adjustment trial balance. Let's look at the pre-adjustment trial balance, and the figure that I've got under loan, you got 955,000. I've got 955,000, but in the adjustment, we've got 1,082,400. They gave us 1,082,400. So they're telling you that your loan account at the end of the year, that figure they gave us was 1,082,400, but you recorded 955,000. Now, if you recorded 955,000, you recorded the full payment with the interest. You came up with a figure of 955. So that means the interest will be the difference. It will be 1,082,400 minus the 955,000. Do that calculation for me quickly. 1,082,400 minus the 955,000, and you will arrive at your interest, which is 127,400. Very good. 127,400. That is my interest expense. That is my interest expense in the statement of comprehensive income. In the statement of comprehensive income. But now I need to work out my current portion of the loan. The current portion of the loan. Now, what was my loan account balance now at the end? The current account, the loan account balance on the 28th of Feb is 1,082,400. That's the figure, 1,082,400. That is the statement that you receive from the bank, and the bank is telling you owe them 1,082,400. They said 10% of the loan balance will be settled during the next financial year. I need to separate it now, because you must remember long-term and short-term. Long-term means if you're going to pay after 12 months, that's long-term. But if I'm going to pay within 12 months, that will be classified as your current portion of the loan, current liability. So the amount in that case, you'll have to work it out, and they said it is 10% of the loan balance. What is 10% of 1,082,400? And that should be 108,240. That's spot on. We're going to put up those answers. 108,240. Perfect. So go to current liabilities. And you're going to write current portion of loan, 108,240. Current portion of loan. Now, the next bit. The interest is there. We worked out the interest. We said the interest expense was, we said 127,400. The difference between the bank's figure and your figure. The bank added the interest. You never add the interest. So the difference between the bank's figure, the bank is telling you owe them 1,082,400. You are saying you owe them 955, but we never add the interest. So subtract one from the other and you get the interest. Okay, 127,400 was in the statement of comprehensive income. In the balance sheet, yes, under current liabilities. Under current liabilities, you put current portion of loan, 108,240. Okay, now, after taking into account the adjustment, the net profit after tax amounted to 689,310. The current income tax rate is 31%. You know, you can't go into the exam room if you can't or if you don't know how to work this out with regard to the net profit before tax, the net profit after tax, and the income tax. To answer somebody's question, the 955,000 is before the interest was added. The 955 is before the interest was added. Here we just subtracted the total amount. Okay, let's just go quickly here. I want to get through this last bit and then I can summarize maybe. But the important part was the ratio. You cannot go in the exam room if you don't know how to apply the ratio. I'm telling you, you'll be in serious trouble. Okay, now basically, the net profit after tax amounted to 689,310. 689,310. Okay, and the tax rate is 31%. Always remember the net profit before tax. Again, I come back to the same point. Your base 100%. You're starting with 100. You're taking out 31%. So you're left with 69%. So the net profit after tax, the 689,310 is equal to, it's the net profit after I subtracted the tax, so it's after I took out 31% from the original, that is 100%, minus 31% gives me 69%. Now, if you want the net profit before tax, I want the 100%. I will say 689,310 times 100 divided by 69 will give me my 100%, which is 999,000. That's my net profit before tax, 999,000. If I want to work out the tax figure, that means the tax is 31%. I'll say 689,310 times 31 divided by 69. And that will give me my income tax. And I see somebody's put it up there, 309,690. That's my income tax. Well done there. 309,690. That's my tax. What did I say? I said, see, they gave us 689,310. They gave us that figure. They are telling you that that figure is after tax. That means 100%. Okay, with the center. Pay attention. They're telling you net profit before tax. You got your tax. You got net profit after tax. Read the adjustment. After taking into account the adjustment, the net profit after I subtracted the tax, it came to 689,310. The tax rate was 31%. You must always remember your net profit before tax is always 100%. The tax was 31%. So the net profit after tax is 69% for this example. Now, I must remember, you must use the tax rate that they give you in the exam. I don't know what the 100% was, but I do know that this is the net profit before tax. There's my tax, and this is the net profit after tax. So the 689 that they told us, 689,310 is the 69%. You all do math, solve for x. You can either use this as your x or that as your x, whichever one you want. I know this is my net profit after tax, 689,310. I want to know what is the tax figure. I want to know the 31%. The method, 689,310 over 1 times. What am I looking for? I'm looking for the 31%. I want to know the tax. Whatever I'm looking for, I put it at the top. Divided by what I already know. I already know that 689,310 is the 69%. So what I'm looking for divided by what I already know. I already know the 69. If you work this out, you will get your tax figure. And we said that the tax figure was the tax was 309,690. 309,690. That's your answer for income tax. Now, what do I do with the figure that I worked up? The 309,690. Now, you know, Big Brother, you know, SARS, he won't leave you. He wants his money from you. What he does, all companies, they tell them that you all are provisional taxpayers. You are a provisional taxpayer. Who is a provisional taxpayer? Or what is required of a provisional taxpayer? After 6 months of trading, you do business for 6 months, you must send money to SARS. You send the first provisional tax. After the second 6 months, send second provisional tax. So SARS got your money. Then when you do your financial statement and you work out correctly what your net profit was, you work out the actual tax figure, then you will tell SARS, okay, now let's balance up. Let's balance up. I already gave you first and second provisional tax. My tax came to 309,690. I finished pay SARS income tax. If you look at your pre-adjustment trial balance, you got SARS income tax. You paid SARS 295,500. I paid SARS 295,500. I gave SARS that money. That was my first and second provisional tax. They got my money. They're sitting with it. But now I did my statement of comprehensive income. I got my correct net profit, and I have to pay SARS in total 309,690. But I shortchanged them. That means I only gave them 295,500. I gave them 295,500. So I still owe SARS the difference. The difference is I still owe SARS 14,190. I owe SARS 14,190. How I got it? This was the tax for the year. I had to work it out. Came to 309,690. I finished give SARS 295,500. So I have a balance with them of 14,190. And the current liabilities, trade and other payables, 14,190 SARS income tax. And the trade and other payables, you will write SARS income tax 14,190. That's the amount that you still owe them. Okay, and you're going to pay them that money in the next financial year. And you're going to put that in the next financial year, you need to pay them. No, we can't finish the entire paper today. 2 hours are almost up that we had the lesson. But what we can do is next week, I will try and finish this because I allocated 2 weeks for paper 1. So I can finish this and the next bit, that is the cash flow. I need to do cash flow with you together with ratios. I must explain to you how to answer the ratio question. You will score so many marks. It's so easy. Yes, we'll finish the paper next Saturday. All right. Now, some of you asked you how to approach this question. Look, okay, just to quickly round up, listen carefully. When you get a question on the statement of comprehensive income, the first thing is you look at You look at your pre-adjustment trial balance, take the nominal account, slot them into the income statement. Slot them with figures in brackets. Do not write any figures in the money column. You're going to be wasting time. You're going to Tipex and erase and so on. Then you start with one adjustment at a time. Start with one adjustment at a time and record it wherever it goes. It goes in the statement of comprehensive income, sort it out there. And if the bit that goes in the trade and other payables or receivables or wherever it goes, you record it immediately. You record that immediately. So you don't need to come back to the adjustment. You must write things, and you must write on your question paper also for things like trading stock, because you have to work out surplus or deficit. Your provision for bad debts, you must write it on the question paper next to it so that you get the right figures. Okay, and then thereafter everything will fall into place. And I'm telling you, listen to me carefully. You know what? If you sit down and you do 3 or 4 financial statements, you're going to find that there's a pattern. It's just a matter of trying to understand the adjustment. And I'm telling you, you'll be smiling all the way. At the end of this year, you know what? Prepare properly, do the necessary work, and you will not have any issues. You're not going to have any issues with the financial statements. Big question must come out. These things are always in the paper. We have to test you. You want to become an accountant, you must know how to draw financial statements. So what we will do is I'll finish that last bit with you next week, and then we'll do the cash flow. Yes, interest is capitalized. It is added to the loan account. Whenever interest is capitalized, it will be added to the loan account. All right, thank you for those comments. I see some of them want to have 3 hours next week. Okay. Anyway, look, we will try, and then I'll tell you what. Hopefully next week, what I'll do is I might give you my email address, or I'll give you my phone number. You're sitting at home and you're working out something. You got WhatsApp. You can message me. You're stuck with something. If I don't answer your question immediately, but during the course of the day or the evening, I will answer your questions. So if you have any issues, you must, well, I'll try and get them to send the email address to you. You can email me. That's fine. Okay, I think we'll stop there. I've been talking for the last 2 hours, and I think I need a break too now. Okay.